So first, Mr. Volker, let me thank you for talking to me today. It's quite an honor for me to get to ask you some questions about exchange rate policy at our conference.
Well, I regret that we have to do this at a distance, but here we are.
Okay. Well, let me ask you first, sort of an open-ended question. What do you think made the policy coordination efforts in the 1980s possible, and what made them successful or fall short of their potential?
I didn't think so much of the efforts during the 1980s being marked by a lot of coordination. There was no coordination in the early part of the 80s, so far as I remember, but you had a change in the personnel in something called the United States Treasury Department. And the new Secretary of the Treasury and his associates were much more activist in connection of achieving coordination with some other countries. So there was a change during that period, and it was all kind of symbolized anyway by the so-called Plaza Accord.
Okay. But then after the Plaza Accord sort of got going, would you say that there were factors that made it that effort at coordination more successful, or factors that made it fall short of its potential?
Well, I was not an enthusiastic proponent, actually, of the Plaza Accord. I was not against it, but I was a little fearful. I thought the dollar was going to decline and was declining on its own. And from a central banking standpoint, you're never happy about pushing your own currency down.
Right.
You think it might get a little out of hand. So we had a lot of discussion as to how we were going to maintain or at least avoid a free fall. Now, in fact, when the program was announced, you had a decline in the dollar, and there was some intervention, but there wasn't much intervention afterwards because the dollar did fall on its own.
Right.
But against the background of the indication, obviously, of intent. So it certainly contributed to a sizable realignment of currency values, which I do think was necessary.
Mm-hmm. So you mentioned the fear that the dollar might fall in an uncontrolled manner. It seems like central banks in the 1980s were more willing to include exchange rate objectives into their monetary policy decision making than they have been in subsequent decades.
I'm not sure I agree with that observation. It's a long time ago, but we had a particular problem in the United States. The priority was to deal with inflation. And we conducted a restrictive policy. It resulted, among other things, some high interest rates and a big appreciation of the dollar. Now, during that period, frankly, the U.S. Treasury was not interested in doing anything to modify that from the standpoint of intervention or otherwise, which, from my standpoint, was not very useful or constructive, but nonetheless, that was the policy at the time. Then later, beginning in 85, I guess, you had a change, conditions had changed, but you had to change, the Treasury attitude clearly had changed and was much more interested in achieving some coordination internationally.
Right. So from the Federal Reserve standpoint, the exchange rate was certainly not the primary objective. Do you think that was the same in your counterparts, say, at the Bundesbank or the Bank of Japan?
Well, this is a long time ago, but my memory is that the Bundesbank, which ordinarily was not very pro-intervention during that period, finally, in 84, I suppose, was worried about the relative decline in the mark, and they unusually wanted to intervene, and we refused to intervene at the same time to support what they were doing. Now, that was an incident that didn't last very long, but this was an example of lack of cooperation internationally.
Right, right. Once the Plaza Accord took place and the intervention, at least superficially, appeared to have been effective, there seemed to be a lot greater enthusiasm among finance ministries for coordination. At least in the set of meetings that led up to the Louvre Accord.
Yes, that's I think true. And of course, Secretary Baker was a leader in that effort.
Did that create complications for domestic monetary policy then?
I don't recall that creating particular problems in domestic monetary policy. At the time the Louvre was put in place, the strictures of the Louvre Agreement were violated in a few months, and I can remember from my viewpoint, you might have argued, I don't remember when it was, April, May of '87 we're in now, that the Federal Reserve could have tightened more to help maintain the stability of the dollar. We weren't as vigorous as we might have been, but it was a fairly, it's kind of a limited area of change or controversy at that point. You didn't get the big change until later in '87.
Right. So then, would you say it's sufficient for monetary policy to be purely focused on a domestic set of objectives, or should there be?
I think it all depends. You can be in circumstances in which international coordination is important to over time help reinforce your own objectives, even though at the moment it may not be exactly what you would do on domestic grounds. At other times, domestic considerations are probably going to take the foreground, and you have to do what you think is necessary that way. There aren't many central banks that are going to subordinate international objectives they think are contrary to their own objectives.
Right.
Now, in many cases, it will be the policy of the central bank to maintain stability in the exchange rate because it's in their domestic interest.
Right.
So you will get coordination in those areas because there's no real conflict.
Right. How about other objectives like, say, international financial stability or growth outside of the domestic economy?
Well, look, I happen to be, for a long time, a proponent of a somewhat more activist approach toward stability of exchange rates. And I've often written about that. I must say it has not been very fashionable through most of the past few decades. When I see what's going on today, maybe we ought to resurrect some of that effort at closer cooperation to achieve not perfectly fixed exchange rates by any means, but to narrow the range of fluctuation.
Right. In fact, I think I noted that in your Bretton Woods Committee speech of last year, you were lamenting the lack of an official rules-based, cooperatively managed monetary system. And John Taylor at this conference has a paper in which he proposes something similar built around exchange rate setting clear strategies, perhaps as the Fed did in 1985. Is this sort of similar to the type of reform?
I haven't seen his paper, so I can't tell you how similar it is or dissimilar. There was an effort, 2 or 3 years ago, internationally to stimulate some interest in a report that was called the Palais Royal report. I remember the full name. It was pushed particularly by the French that historically had been on that side, and I thought it had a useful analysis, but it didn't have much impact.
Yeah. What do you have a view on what are the major impediments to moving in that direction?
Well, I think the major impediments are that It sounds fine in theory, but when the exchange rate objective seems to conflict with domestic urgency, domestic urgency wins out.
Yeah.
It's very difficult politically to appear to be subordinating domestic policy to international exchange rate stability, even though in the long run that may be a desirable thing to do.
Right. Let me go back to the Plaza for a second. After the Fed had hiked interest rates, and then Reagan came in with a very expansionary fiscal policy, it's sort of no wonder that the dollar rose to such heights. And so one interpretation would be that the Plaza, with its focus on foreign exchange rates and intervention, would be seen in hindsight now as sort of a shoot the messenger type of strategy, in the sense that the exchange rate was really just indicative of the underlying fundamentals.
Well, at that time, by 85, I don't think the exchange rate was indicative of the underlying fundamentals, and I was convinced it was going in the other direction. But when you look at the early 1980s, I think I should point out there was a lot of central bank cooperation, not in the exchange rate area particularly, but in dealing with the so-called Latin American debt crisis, which was a truly international effort in conjunction with the IMF, but the United States was in a leadership position to try to avoid a breakdown of the banking system at a time when the banks were very heavily exposed to Latin American countries that couldn't pay their debt.
Right.
It was an interesting incident because the United States banks were certainly exposed, but even foreign central banks recognized that this was an international problem, and there was just a lot of cooperation during that period.
Yeah, that's a good point. In discussing the Plaza Louvre period, you've written that monetary policy can never be a solution to structural problems. When I look at that time, I think the degree of reliance on monetary stimulus seems small now compared to the heavy use of monetary policy today to gloss over structural issues in Europe, in Japan, in the U.S., even in emerging market countries like India. Is there a limit to how far monetary policy can provide cover for structural problems?
No, I think there is a limit. Look, let me just use the United States and China as an example. In the early part of this century, when China was running a big surplus, we were running a big deficit, everybody was kind of happy that they liked the production, they were willing to hold dollars, we liked to import cheap stuff from China, prices were very stable. That was a period when, in hindsight, but it should have been in foresight, that some basic adjustments were made in economic policy apart from anything the central bank could do to deal with that situation. And things were going smoothly, so there was no particular pressure to do anything.
Right.
And it was not basically, as I see it, a central banking problem.
Mm-hmm.
It may have been partly an exchange rate problem, but it was hard to get any agreement on the exchange rate.
Right, right. Well, one of the motivations for the Plaza was that the U.S. had a fairly, at least at the time, what was felt like a heavy reliance on foreign borrowing.
Yes.
And then with the overvalued dollar, it made us vulnerable to a disorderly drop in the dollar. We've obviously had some large imbalances since then. We've had the downgrading of America's debt rating, but we haven't had yet a real collapse of the dollar or a big spooking of foreign investors. Is that
interesting?
Is that a still a relevant fear?
Well, in the land of the blind, the one-eyed king is king. The United States is doing better by and large than the rest of the world, and in an uncertain, kind of turbulent situation in Europe, now in respect to China, the dollar doesn't look so bad. But I think it is dangerous over a long period of time to have the system so dependent upon the dollar,
Right.
and particularly a buildup indefinitely of dollar holdings abroad does leave us vulnerable in different economic circumstances. Right now it doesn't hurt, but I could imagine times when it would hurt.
Yeah. Would we be better off moving to more of a multipolar system with, say, the euro or the renminbi as a alternates to the dollar?
Well, that's a big question, and maybe so, but we talk about it quite a lot, but now neither the RMB nor the euro and the Eurozone look stable enough and open enough and strong enough financially to carry the load. So it's left with us, and too much so.
Right, right. Well, with the, I mean, it sounds like you would agree, but with the volatility that we had, obviously around the time of the Plaza Accord, with the dollar going up and down by 50%, and this year the dollar's up by 20%.
The big problem, of course, back in at the time of the Plaza, which I'm sure Secretary Baker was worried about, was a rise of protectionist pressure in reaction to the seeming lack of competitiveness of American industry. And it'll be interesting to see whether that rears its head once again here. Fortunately, I think it's been pretty quiescent.
Right. Is that part of what explains perhaps the lack of ambition to more global approaches to macroeconomic policymaking? That the fear of say a negative protectionist outcome is diminished at the moment?
I think your observation is probably correct, that the sheer political pressure isn't as strong as you might have imagined it to be, but you certainly see it now, and there's an increasing amount of discussion about the problems of competitiveness of American industry, as recently as Caterpillar dropping, 20,000 people in the paper yesterday, and blaming it on competitive difficulties.
Are there other factors like the intellectual commitment to coordination or lack of leadership that are part of the reason why we don't see more ambition in terms of coordination?
Well, difficulties in terms of coordination, I think are evident because of the domestic difficulties. That if you think of the three partners, the United States, Europe, and China, the UK in a slightly different position. The United States looks the most stable of those, and the others are so preoccupied with their internal problems that I think it would be difficult to work something out.
Right, right. Well, where do we go from here?
Well, we're going to live with a rather messy system, I think. If people get aggravated enough with it, have enough problems, maybe we'll go back and think about what could be done to create a more stable system. The question was raised in the middle of the crisis in 2008 or 2009, but as soon as the recovery got underway, people kind of forgot about it again. And it never went very far. That's when the so-called Palais Royal Accord was talked about. I don't see any near-term prospect of a more ordered system. I regret that, but it takes a big commitment on the main actors. I don't think any of the main actors are prepared for it.
Well, if I could just ask you one more question. When you speak with Janet Yellen, do you have any particular advice for her in navigating these times?
I don't think current chairman of the Federal Reserve Board need advice from their predecessors, particularly predecessors twice removed.
All right. Well, fair enough. Mr. Volcker, thank you very much for taking the time to speak with us.
Okay. Well, I'm sorry this is a little messy.
I'm sure it'll be fine.
Okay.
All right. Well, thank you. Thank you. Bye-bye.